You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again to rock out with the option block, the rockinest of all options programs. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-compelling Options Insider Radio Network. Got a great place for you. Check it out if you want to get the latest on all things options, theoptionsinsider.com. You got breaking news on the options market. You've got unusual activity, analysis, our much ballyhooed Tesla tracker. You got all that fun stuff, as well as all of the radio. You can mainline all 15 programs at your leisure over there. On the website, of course, you can always get it in all the usual places as well, iTunes and your TuneIns and your Stitchers and your Pocket Casts. And our mobile app available for iOS, Android, and the ever-popular Fire OS. And, of course, the hardcores, the crazies, we love you all. You can also join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. Grab that link. We tweet it out and put it in our emails and on our site and all of our social media all the time. Just grab it once, and you're good to go. You can use that link every time we go live for all of our shows, not just this one. So it's a great little tool to have in your back pocket. You say, I want to listen to some live options audio. There you go. We got you covered. However you listen live after the fact, make sure you hit us up. Questions, comments, pearls of wisdom, slams against the greasy meatball. We take them all. Here, we do love to hear from you guys. And joining me on the old program today, let's see. Let's start off out there in the paradise on earth known as St. Charles, Illinois, where we are joined by none other than Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. How are things in scenic and lovely St. Charles, sir?
Loving life as per usual.
I love it. I love your love for life. A lot of love here on the show. We'll see if we can keep the love alive as we turn now. I don't know where he's beaming in from. Could be from the global HQ downtown. Could be in one of the controversial towns that maybe, at least according to him in some internet list, changed America, Riverside, Illinois. Could be from the suburbs of Detroit. Could be from a hut on the Gulf of Mexico. You never know. He is the Greasy Meatball, Mr. Mark Sebastian from OptionPit.com, as well as Carmen Line Capital. Mr. Meatball, welcome back to the Option Block, and where the heck are you today?
We need to get some converted music from Where in the World is Carmen Sandiego to get Where in the World is the Greasy Meatball, just because, my ability to move. But I don't consider the public broadcasting system to be some internet list. But yes, I am from one of the 10 towns that changed the world, and that is beautiful Riverside, Illinois.
I thought that list was made by MarkSebastian.com.
The town in the forest.
Wasn't that list put together by the well-known outlet called MarkSebastian.com? Isn't that the outlet that compiled that list?
No, because MarkSebastian.com is some guy that used to be a DJ on Z95 here in Chicago.
Oh, you've checked it out, have you? Well, there you go. I'll reach out to him and see what he thinks are the top 10 towns that changed America. Meanwhile, let's keep on rolling, see what trades changed the market today, because it's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the man said, the portion of the show where we break down what was catching our eye, what activity, what nuggets were coming across our tape here in the broad market, as well as, of course, from a straight-up options perspective. And a little bit of a quiet day to end the day here today. Most of the major indices closing off here to end the day. S&P off about 1/3 of a percentage point. Dow close to unched, off slightly on the day. And yet again, the NASDAQ feeling the brunt of it, off about 0.5% or so right now. A lot of conflicting theories as to why NASDAQ seems to be dancing to the beat of its own drummer. Maybe we'll get to that in a little bit. And of course, this little bit of red on the screen means we get a little bit of green on the old VIX cash screen as well. Up about 0.5 point or so today. Right up north of the 11 handle, which I'm not liking for my crystal ball prediction tomorrow. I was picking shy of that, shall we say. So we were looking good for a while there after we saw that pop. Then we saw it come off aggressively, and I was liking the direction we were heading. And then today, kind of bucking that trend, moving us back over north of the 11 handle after having gotten down as far today. We got down about 1074 today. So, yeah, not the direction I need. What we see, we got another day, another session. We all know everything could change on a dime in the vol space. So let's see if we can get a little bit of that, squeeze a little bit more air out of that balloon when it comes to tomorrow. We got a little bit of time for that. But before we do that, let's break down what we're seeing today. Let's start with he who likes to compile his own lists on the web, Mr. Meatball. What was catching your eye in today's market activity, sir?
You know, I got to say, I'm surprised we did not manage to get green on the day the way we kind of viciously rallied on the European close. You know, the S&Ps look like, if you looked at the market at 8:45 this morning, 9:45 Eastern time, you were saying to yourself, boy, is this another Trumper tantrum where we're going to tank 38 points and things are going to be ugly? Because the NASDAQ looked terrible. And, you know, VIX was up nicely, approaching 12. The S&P was down almost 1%, you know, but then little Russell seemed a little strong. You know, lo and behold, we ended up rallying. The thing that kind of surprised me is that, you know, yeah, I get why the NASDAQ might be down, but I don't get why they were taking it to the financials today after what was I guess a relatively slightly more hawkish statement than the market was expecting. That's usually pretty good for the financials. So I'm a little surprised at the way things acted throughout the day, and I think that was the one thing that kind of stopped the market from going bullish was the financials. You know, I look at the NASDAQ, and it's acting like it's in some pain. I'm not exactly sure what the problem is, but that is not a happy index on any level.
No, it's been funky to watch. I think we first, as you recall, this first started breaking pretty much last week during vol views when, you know, everything all of a sudden started selling. We were like, what the heck's going on with the NASDAQ? And it's kind of been continuing, perhaps not to that degree, but still it's been continuing this ongoing disassociation of the NASDAQ with the Dow and even more with the S&P. And they're both all moving in lockstep today, but varying degrees, obviously. So it has been interesting. I've been hearing some interesting theories about that. But yeah, there's a lot of smoke and mirrors as to why exactly that is. I saw someone putting out the other day that because you know, so little, they estimate, this is Morgan estimating, only about 10% of the market is what you would term to be traditional old school, pick up the paper, look at a quote and pick a stock type stock picking anymore. The rest is pretty much completely in the HFT/algo realm or somewhere along those lines, and some of those have turned obviously sour on all things NASDAQ, but still it is interesting to debate. That said, let's turn our attention to Uncle Mike. Uncle Mike, you've been gone for most of the week, out and about, flitting around as you are wont to do when the summer season is upon us. So what's been catching your eye this week? What's been going on? And how many, I'm going to guess, I'm going to put the over under at 100. I'm going to take the over. How many adjustments did you make to your silver collar this week? I'm going to over at 100. Go.
You're taking over 100, huh?
Easily. Maybe 2.
Oh, man. Well, bad news. You took the wrong side of that trade. I know it's shocking as it can be, but did not make any adjustments on it. We still have a lot of time left in the longer term one. So waiting for a little bit of a rally. I know it pulled back a little bit over the last few days, but still waiting for a little bit of a rally before I sell some more premium at another level. But I assure you that there will be a very long and detailed strategy block the day that something does happen, if indeed it does. A couple things that I was finding as of last week, I closed out one of my call spreads that was with my long call. An SPY, and I'll talk a little bit more about this on the strategy block. Today was an exciting day for me in that the VIX was higher, so we had a little bit of volatility, and I was actually able to sell a one-day put spread and got excited about that. Haven't been able to do that in a couple months, but was able to sell it. Lucked out in terms of the time of the day with which I did sell it, but there was enough of a cushion to where I felt justified in doing so. Once again, I'll talk about that a little bit more in detail in the strategy block, but the other thing that I noticed, just to kind of add to what Mark said, is that it did look like we were going to have could have a pretty nasty down day today, right around 9:20 Chicago time. But the market leveled out a little bit, and then it kind of came back the rest of the day today, and it's actually up another from what looks like about 1.5 points in the futures in the since the cash close. So there were buyers that came in. And because of the fact that there were buyers that came in at that level, even after the market coming down like it had, I do believe that's a bullish sign for markets in general. I don't think this was necessarily in relation to anything about the news about Trump did not deny being investigated for obstruction of justice. I think we're at a point right now to where the market is so insanely numb to all the stuff that goes on with Trump that it doesn't care right now. Now, not to say that that won't change things or that won't change in the future, but for now, the market just really doesn't seem to care about the Trump news, whether it's good or bad. And so that's one thing that I think held true today. I really believe that if this were 20 years ago and Bill Clinton was under investigation for obstruction of justice, I think it would have meant a little bit more, but it just seems like there's something that's coming out all the time. And once again, not trying to be political on this, but just sure seems like there's just a lot coming out that truth or not truth, there's just definitely a lot of news on what's going on in the Trump campaign, more than anything that I can ever recall. I think that we did have a little bit of a fear sale, a little bit maybe because of interest rates and yesterday. Not so much for what the action that the Fed did, but I think it's more in relation to what they're believing they're going to do with one more rate hike this year. I think a lot of people expected that, and I think this was kind of like more of a confirmation of that theory by a lot of people. And I think this was kind of a just to be safe sell-off at the beginning of the market, and then with buyers coming in as they did, I think it's in the rearview mirror at this point. So
yeah, and Mike, I agree with you. I think we'll probably have a nice rally tomorrow on Friday, and your Trump thing is so close to home. I mean, has anybody ever benefited more so from the 24-hour news cycle than this guy? I mean, the way news hits, just they're so interested in breaking news, they don't think to like time things out and put them out when they're going to have the most newsworthiness. Right now, the Mueller stuff's interesting. I don't think I don't think anybody really thinks it's a big deal. I think that what went on with the congressman probably also is a real problem. Too. And that's going to bury any news from there. And then again, you can only have so much. And this was my comment especially about the Washington Post and the New York Times. They're doing themselves a disservice by getting information and immediately cycling it out rather than taking the time to make sure they're 100% right and finding somebody that will be an actual source. With the number of stories they've had to retract, I mean, Breitbart has retracted, which is for those of you who don't know, Breitbart is a hard right news blog, and they are retracting so much stories. They're starting to make themselves out to be that. They are. I've said this on Volviews a couple times that some of these organizations seem like they're so not as much news as actually trying to get the president, that it kind of takes away from the actual newsworthiness, which is sad because these are kind of great papers. I was commenting today, can you find another newspaper outside of the Wall Street Journal that hasn't had to retract a major news break? The four biggest papers are the USA Today, which is basically an aggregator, the Washington Post, the New York Times, and the Wall Street Journal. And the only one that hasn't gotten completely caught up in some endgame story is the Wall Street Journal. And, are they a conservative tinge? On the editorial board for sure, but I don't know if you've talked to any of their reporters. Their reporters are, any of their reporters, their news reporters could work at the New York Times or the Washington Post. They're all the same. It's just the editorial process, I think, is stopping some of this unconfirmed stuff from getting out. And it's the one time where, maybe having a more liberal newsroom and a conservative editorial board is working out for them. But I don't mean to go on a diatribe. It's just, people wonder, why aren't we selling off on all this news? You can only have so much news before people become so much news, and so much that ends up being just innuendo and quasi fact that people start to become immune. And I think that's what is going on here. And that is really from the 24-hour news cycle. I think that's the number one thing. There's such demand for get it out now. Unfortunately, there's not a make sure it's right before we put it out. And Fox, Breitbart get caught doing it. They've caught doing it a bunch of times. And now the left-leaning news sites are starting to do the same thing, and it's unfortunate.
Well, part of that, I'm sure, augmenting or exacerbating that is, of course, the fact that Trump himself has extended the news cycle now. It used to peter off in the wee hours, and now that's when he starts firing off his tweets. So you can't really relax as a newsroom in the 3 to 6 a.m. Range anymore, when you probably got the more junior guys on anyway, because that's when he's stirring up the tweet storms. The whole cycle is kind of in flux, and that probably plays back to what you were saying before too, Mike, as well, about kind of how this would have played under other administrations. Just the volume of these things hitting the tape, and so much of it coming from his own hand these days is so unprecedented that I think just one more in this endless cycle or storm of things hitting the tape probably isn't going to make things move as much. Whereas previous administrations, this wasn't the case. It just wasn't the volume, and so it would have probably stood out a lot more. Which is, speaking of sticking out this week, Fed was sticking out. Our friend Miss Yellen and crew, they did what they were expected. I think they had coming into about a 99% price in was going in that they were actually going to do exactly what they did, which is hike by about a quarter point. So yet another anemic kind of, we have to raise, so we'll do it. And it's funny, they even came out this time and said, the Fed is, notorious for being kind of inflation hawky, and that'll change depending on who's running it and what their outlooks are. But it typically lean towards the very anti-inflationary bent. And they even said that this year, inflation, their action level is about 2%. It's going to fall well under that level. And yet still they decided to raise. Again, it's a small bit. It's a token, a quarter point. So I think that brings us now to a grand total of, it was not quite 2 years ago. It was more like a year and 9 months ago or so. But when the Fed first kind of picked their head up out of the sand and said, hey, we may do something here. I think in that entire range, I think we've had 3/4 of a point now. So we've had a lot of noise, a lot of smoke and fire, signaling not that much. At the end of the day, of course, in recent months, the Fed has been overshadowed by a lot of other things coming out of the government. So the Fed hasn't been the big story it once was. But still interesting stuff. What did you guys make of this week's move in the markets? Kind of, it kind of priced it in. We saw a little bit of a move up in VIX cash, got to about the 12 handle or so, and then it kind of gave that up pretty promptly afterwards. Anything surprised you about how this played out, Mike or Mr. I almost called you Rock Lobster, Mr. Greasy Meatball?
Nothing surprised me.
Yeah, and like I said, the announcement was a surprise. If anything, their statement was a little more hawkish. But other than that, nothing. I mean, it was, I guess the piece that was kind of most surprising to me was, I don't know if you saw the way the long end of the curve in bonds moved, but they ripped into the Federal Reserve for what appeared to be almost no reason, which was, I think, maybe the one big oddity that I saw. I mean, that was a nasty bond short squeeze that took place on the on the open yesterday.
Yeah, a lot of crazy stuff cooking. I think Mr. Meatball coming to us from a golf course there, so we'll let him putt a little bit while we keep on going. Sounds like a nice hush to golf announcer as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time for the funky portion of the show. It's time for the Odd Block, the portion where we break down some of the weirder stuff that came across our collective tapes this morning and throughout today's session. Speaking of weird, you guys keep asking us, and it just keeps getting weirder. These weird mystery Tesla puts out there, these Jan 2019 50 puts, they keep piling in. Yes, we see them. You guys are asking about. So yes, we see the volume continues to flow in. About 174 more going up today. Total now, since we started watching these about a week and a half ago or so, it's added at least 2,000, if not more, closer to 3. There are about 27,000, almost 28,000 contracts open on this crazy, crazy strike. So all of you who keep speculating as to why these trickles keep coming in. Someone's loving these things. They've been trending down the whole time. Even today, these things are only trading $1.22. They were at $1.40 something when we started looking at them. So they've come off quite a bit, but still, they continue to be popular. Speaking of funky Tesla puts, other weird stuff coming across our tape out here today, including that far off Jan 2019 expiration month. Just keeps getting some weird stuff in it. Those far out of the money puts weren't weird enough for you. I'll flip the script for you and give you some deep in the money puts. How about some 450, 470, and 480 puts, and also some 460 puts as well, and a sprinkling of 440 puts going up as well. Pretty much all these deep in the money strikes. We're lighting it up today to the tune of nearly 1,000, 880 of these 450. These are all, again, January 2019, 450 puts, 880 of those lighting it up. This morning, they were only about 440, so they've done 2x of that. Seemed like it might have been, it looked like an initial blush, like it might have been a funky fly or something going up, but then the numbers started coming in a little bit differently on the later legs. About starting off the day, about 250 of these 480 puts. They topped out about 255, so they didn't really change much throughout the day. Also was 220 this morning of these 460 puts, now about 385, some more of them popping in. And the 470 puts also come on the radar. They weren't trading this morning. 440 of those. So it's pretty much a put strip at this point. There is some open interest worth noting on these, about 1,200, including of the 4.5 puts out there. It's the 450s. So some interesting stuff. I don't know. The puts, the long-term puts in Tesla are just all sorts of funky. Mr. Meatball, I don't know. I'm trying to think the last time we saw names have this much just, deep in the money, far out of the money put activity. What do you make, of anything, of these? Most of these went up mixed, some lifting offers, some mid-market. All these things kind of do. So what are your thoughts on someone doing, at this point, $100 to about an $80 to $90 in the money puts here in Tesla, about a year and a half up?
It might be a way of actually managing delta. So one of the ways, because the stock is hard to borrow and can be difficult to trade, using deep in the money puts can be a way of simulating short stock. And so you could see some market makers or a trader and a market maker doing some of these deep in the money trades as a way of managing short stock positions that they need to have. So that would be my best guess as to what caused that paper to go up. But who knows? It could be something else.
Yeah, it's always some kind of funky surrogate stock play. And at first I was going up, I thought maybe it was part of a box, but there were no other corresponding legs. Certainly not the call legs going up on those, so no, it wasn't a box. But yeah, and more strikes kept lighting it up to the tune of, I think, a total of well over 4 strikes now. So interesting stuff. We'll keep an eye on those as well. We see a lot of people coming in for obviously a lot of short interest playing in Tesla, some other ways looking to get, as Uncle Mike, or I should say Mr. Meatball mentioned, they're trying to adjust your deltas. Clearly, these are deep in the money. A lot of deltas going on with those as well. So this could be a lot of. I'd be curious to hear your thoughts. Why are people playing in such weird strikes out there in Jan 2019? All the weird stuff seems to be happening out there. So Hit us up with your ideas. I know you will, because whenever we mention Tesla, you guys go crazy. You hate it, you love it, either. Either way, you have no shortage of opinions. Speaking of names that have been of interest of late, we talk about this one a lot. It's kind of tapered off a little bit, probably because the stock has dropped so much. This is Yamana Gold Inc., ticker symbol AUY, closing today a whopping $2.48. So hopefully the Viceroy is not listening, because he'd be deeply offended us talking about some size options activity out here in a $2.50 name. And yet that is exactly what we saw. This was one of this, if not the size trades of the day out here. Someone coming on deciding, you know what? I like my hedge. It worked out pretty well, and I'm going to roll it and put on some more. And that's exactly what he did, to the tune of the July 3 2.5 put spreads. Paper coming in and just lighting up to the tape, a total of 159,000 of these bad boys going up. So size paper, 318,000 total contracts on this spread. Looks like paper coming in and it's probably selling and closing out those July 3 puts. There is some size open interest there, about 206,000 contracts. So paper obviously selling those out and then reestablishing. Again, I said the stock closed right around 250 today, reestablishing at a little bit more relevant strike, and also taking a hedge that's worked fairly well off the table, putting something back in this pocket, doing the spread net for about 36.5 cents there on that one, because they came in and then they bought the July 2.5s 159,000 times for 17 cents. Open interest pretty anemic there, only 11,000. So interesting stuff. Also worth noting there that this is just some size. Probably I think I'll have to check to make sure, but at the end of the day, if something else crazy didn't come in, but I think this might get our award today for the size put trade, or size trade in general, out here in the old options market today. Mr. Meatball, you probably remember, we used to talk about AUY a lot. I know it was one of Andrew's favorites when all the miners were kind of lighting it up. In fact, let's look back at how this one's been doing for the better part of the last year or so. And back a year ago was, I think, when we were talking about it a little bit more, when it was a comparatively rich $5.60. It's been kind of a turbulent year ever since then, and we're hovering right around the lows right now, right around the 2.5 range. So our friend here probably sitting on some size long stock, got some size puts that worked out in his favor. I'm sure you don't look askance at rolling down to a little bit more at the money strike and taking some of these meaty puts off the table, because how many times have you said on the show, if you don't do anything with your hedge, it's kind of useless, right?
Right, and if you want to maintain some sort of exposure to the underlying, you have to move around your hedge, right? Otherwise, your position actually slowly converts into nothingness. So that is another good reason to do that trade.
The weird thing about it, I would have thought if he's sitting on a little house money, and not a ton, he's only about 37 cents, but still, you think he might buy himself a little bit more time. The fact that he kept it all in a straight vertical and just kept it all in July is kind of weird. You think he would maybe roll out a few more months and buy himself a little bit more time, but clearly that's not the case. Clearly he's happy just hedging through July, and then afterwards maybe he'll pick his poison on a new strike. Weird stuff on that one as well. You got time here for one more. Let's go to our old friend, actually a newcomer to the show here, AXDX. This is Accelerate Diagnostics Inc., ticker symbol AXDX. AXDX, $27.15, closing today, up about 2.5%. This is a name that does about 1,900 contracts a day. Today doing over 10x that, about 20,000 and change, and 1,000. This might be a record for us. 1,027 to 1 puts over calls. Yes, 20,555 puts and 20 calls. So all the action today. We're going to talk about those 20 calls in depth. Nope, going to talk about the puts. And it was an interesting. Looks like someone. Maybe just getting the heck out of Dodge. They were swinging for the fences, either that or they were looking for a very catastrophic type hedge. Either way, it didn't work out too well for them. Paper coming in today and dumping 19,000 of the 12 half. As I said, 12 half puts, so over 50% out of the money puts, dumping those for a penny. When you're dumping those for a penny, it's probably things didn't probably work out in your favor. Also dumping today 1,000 of the June 15 puts, so a little bit more reasonable. Also blasting those out for a penny. It's worth noting this was not a long-term trade. These puts were picked up, the 12-half puts picked up for a dime back on the 11th of May, so a little over a month ago. And the 15 puts picked up a day before on the 10th, also for a dime. So both of these kind of looks like they were specking on some far out of the money action here in AXDX. If you're not familiar with this, they are an in vitro diagnostics company engaged in providing solutions that develop patient outcomes through the diagnosis of serious infections. So this sounds like our typical spec trade on one of these crazy high-flying biotech names here, and it appears like our friend was a little bit too aggressive for his own good, because I'm surprised he found a penny bid. I'm guessing the guy who facilitated that trade to begin with had pity on him and took him off for a penny for him. Hopefully he did him some favors on the commissions as well. This name has been kind of turbulent, shall we say, over the past year, after dipping as low as about $14 almost exactly a year ago. It's been rallying and kind of bouncing all over the place ever since, getting as high as 26, then dropping back down to 20 and bouncing up and lower again and heading up today, kind of near the upper portion of that range, right around $27.15. So it's been a turbulent year, as you'd expect, in a lot of these smaller biotech type names. Mr. Meatball, take us home here with our friend clearly buying himself some lottery ticket puts and then deciding to take the penny he can get for them with about how much left is in these? Not that long. 1 day to go for these puts. Giving up the ghost here in AXDX.
I don't know. I mean, I don't know why you take the penny unless somebody said, we'll close it for free. But that I don't know. I mean, this is one of those where it's like, okay, yeah. Is getting the penny today worth getting one more look at it tomorrow morning? I mean, how dumb is this guy going to be if like AXDX is down 50% tomorrow?
That would be awesome.
Not going to be happy.
That would be awesome. I should totally bookmark this trade just for that. That would make our Odd Block Hall of Fame by a mile. If he did that, you're right, because he scraped together this ridiculous penny bid. By the time you sell it and you pay the guy for doing it, it's probably going to cost you money. And that would be hilarious if it dropped to 12 tomorrow. That would be the trade, or that would be in my Hall of Fame Odd Block trades. I love it. So good stuff. We'll watch this one through tomorrow. Pretty low delta, shall we say, of something like that coming to pass, but you never know. We'll keep an eye on that. Let us know what you think about that too, listeners. You guys are always writing in about what you think about closing pennies and closing shorts. And you guys, a lot of you trade short premium and buy them back. How about when you're long these trades and it goes against you and you got a penny or so left in it? A lot of brokers actually let you close those things out for free, sometimes too. What do? Do you take the penny and run? Do you say, hey, I got another day to swing the fences, let's go for it? So let us know what you think, though. Meanwhile, it's time for Uncle Mike to let us know what he thinks, because it's Thursday. That means it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. This is indeed the portion of the show where Uncle Mike takes the reins and tells us about his legion of adjustments to his 2-year SLV collar. No, of course, I'm joking. That thing, he doesn't do anything with that. It's been dead ever since he put it on. But that said, I think you alluded to at the top of the show, Uncle Mike, something about adjusting and closing out long SPY calls or call spreads. So have at it, sir. The floor is yours.
All right. Well, let's go back in time to that wonderful Friday of, last week. We started to get a little bit of volatility in the market. And by volatility, I mean some actual movement. If you look at a price bar from last Friday, you'll actually see some movement both on the VIX as well as the S&P. And it was actually starting to move a little bit. So I made a decision last Friday. I wanted to go from my diagonal spread by selling call spreads against a long call. So it's kind of the modified diagonal spread, I guess. Got out of that altogether midday. And actually, as the market went way down, I ended up even doing a day trade. I typically don't do that. I got into another call spread for the following week. It went down so much. I'm like, well, I got to get out of this now. So I got flagged for being a day trader for a day, but that's okay if I just do it once. It's not a big deal. And I fully justified in doing so, and I do it again, quite frankly. But what I did on Friday is I switched from being diagonal to being vertical on the long call spread. Now, why is that? Well, we're starting to get some movement on Friday. And if we're going to have higher volatility, I would much prefer to be selling put spreads on dips than losing on call spreads when the market goes higher. Don't get me wrong, both of them are good if they work, but we got to the point to where I feel that if we're going to get some more movement, I'd rather have the ability to sell some put spreads in my back pocket. So I ended up taking on a similar amount of deltas, but going with a longer term call spread right now. This is a trade I got into on Friday after getting out of the diagonal. I'm currently long the 236 call for SEP for SPY and short the 246 call for SEP for SPY. Basic long call spread a few months out. So that's not a huge thing, but we finally got a dip today. And the dip, although it was a gap down, it was a dip. And I was able, because I had a lot more money left on the table, I was able to sell a small put spread. And so what I sold today was tomorrow's expiration. I sold the 241 half, 240 half put spread. I got a credit of 30 cents on it, so I was very happy with that. And the concept behind it wasn't that I was necessarily trying to, we have a dip, let's buy the dip, because of my technical indicators or anything like that. Yes, it was because we had a little bit of a dip going, but what really attracted me to the trade is that we had enough volatility in the marketplace to actually make that somewhat attractive. When I actually put on this trade, SPY was trading roughly 243 or about 240 in the higher 242s. So with that, I already had about a 15-point down day in the market. And it did appear to me that we were starting to level off a little bit at the time with which I did it. And on top of that, I put myself in a position to where in order for this put spread to be in the money, we're going to need a 25-point down day after the markets come down a lot and after it's starting to look like it's leveling off. I felt with all of those things, it made sense to do the right risk-reward type of trade. So I sold the put spread. Now, obviously, the market came back, and it's looking pretty good today. Going into tomorrow, still has a few pennies left in it that I'll close out tomorrow morning, most likely. But the lesson for today, or the thing that I want our audience to take away from this, is that volatility shifts, meaning it's not the same market today as it was 3 weeks ago, 3 months ago, or 3 years ago, or in a lot of times 3 seconds ago for that matter. And so you have to be nimble with what you're using for your strategy. And with that, let's say the market would have gone down, then yes, I probably would have gotten out of a call spread for a profit most likely, and then possibly had the chance to sell one again. Maybe I would have, maybe I wouldn't have. Who knows at this point in time. But what I do know is that when vol's high and the markets dip, I do like selling put spreads. And when you have that opportunity and you're a bull, that's the other thing, you got to be a bull to actually be doing this, and which I am. That's a position with which I want to be in. I want to put my clients' money in because I believe it has a higher chance for success, and that's what we did today. So when you are doing your trades, be nimble with your style of trading. Sometimes verticals work better, sometimes diagonals work better, sometimes horizontals work better. You have to understand what you're doing for getting into a trade, getting out of a trade, and why it's the right scenario. Not just because, I like to do this strategy because it always works. No, it doesn't always work. There's no strategy that always works. There's plenty of statistical data out there that proves what I'm saying. But there's one to where if you're an individual trader and you believe that the odds are better doing one strategy over another, that's something that can be very powerful. So takeaway from today, make sure that you are nimble with your strategy selection. And that is the strategy block for today, June 15th.
since we're hitting strategery, we were just talking about those hitting that bid and those penny puts here today, Uncle Mike. I'm just curious your thoughts on this since we're in the strategy block before we roll out. Is that something? When would you consider doing something like that? You got this long option position, could be puts, could be calls, could be whatever, and it's clearly gone dramatically against you. Hopefully you would have closed it out by then, but let's say in this hypothetical scenario you did not, and now you see this one penny bid in a scenario like today. You got a couple of days to go in this option. What would you do in that scenario? What do you think of people hitting these penny bids and getting the heck out of Dodge, and foregoing whatever chance they have left in that position? If you've already let it go that far, is it worth keeping, or should you just max out and crush that penny and get out while you can?
There's one to where the general rule that I like to use is if I'm in a trade and I'm not sure, should I stay in or should I get out? I always ask myself, would I get into this trade, or if I was flat and totally in cash, would I get into this trade right now? And that's only if I'm in doubt, because there are some trades where, let's say that you're looking to get a $5 profit and you're already at $2.50 in profit. And at that stage, no, I wouldn't do it. But if it's something to where you're in doubt of should I stay in or should I stay out, I typically would have been out by now. I mean, don't get me wrong, I have plenty of losing trades. Mark Longo will highlight all of them if you ask him to, which is, I say it as a compliment, because that's how Mark keeps the show honest. So I would probably be out of it before it gets to that situation. But I guess if it's that situation, I'm usually of the school of thought to where if there's no commission involved, and I'm able to close out that one penny, if I have like 100 lot on there, then, well, hey, that's $100. That's dinner, that's entertainment for the night, and I wouldn't want to risk my dinner date with my wife, let's say, for a penny option trade. So I would likely get out of it if I had a guaranteed one penny and it was a big enough size. Now, let's say that I have a 2-lot, and I have to pay commission to close out a 2-lot, and I have to pay a ticket charge of $10 to close out a 2-lot, which, by the way, if you trade through the RCM umbrella, you don't have to do that, such a thing. You don't have to worry about a ticket charge. Shameless promotion, I know. But if for some reason I have to pay a $10 commission to close out of a $2 trade and I'm long the option, then, well, no, I'm just going to let it sit there and let it go. So I'm typically a fan of closing them out, but the size and everything has to make sense to do it.
There you go, listeners. That'll do it for today's strategy block. Still got a little bit of time, so it's time for you guys to dive in, and we'll open up the old mail block.
It's time to take your seat on the all-star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block, the portion of the show where you guys, the crazies out there, and we love y'all. We love y'all. You guys get to write in your questions, your comments, your insights, your slams on the meatball. We welcome all of the above at Options on Twitter, Options Insider on Facebook, all of so on and so forth. It's baked into our mobile apps available on the website. And if you're listening live, you can chime in live as well. And we asked you guys at the beginning of the week to shows you what's changed in a week or so from a VIX perspective. This time last week, we were talking about historic lows out there in VIX land, flirting with the top 5 intraday prints on VIX cash of about 937. I think that was actually exactly a week ago today that we did hit that. And then, so we asked you coming into Monday, it looks like things were trending south again. We said, hey, we asked you guys about a month or two ago what you thought the low would be for VIX in 2017, so for the rest of the year, and somewhere around 40% of you said it wouldn't break the 9 handle. But we thought, given the fact that we were flirting with that not that long ago, maybe some of you have rethought your position, so it'd give you a chance to vote again. We said, hey, how low will VIX get in 2017? A little bit more of VIX limbo out there, and we gave you 4 choices. Will it still not break the 9 handle? So you still stay on that tip. Will it not break 8.5? So not get below 8.5 to the downside. Will it not break 8? Or are you on the lookout below tip? We're going to see a 7 handle in 2017, which means maybe you work for Barclays and the research team over there, as we discussed on Vol Views last week. That said, Mr. Meatball, we'll start with you. What is your vote here for the rest of 2017? What you think our low is in VIX land, and then what do you think our crazy crew is voting for?
I think the crazy crew is voting the lows in. I'm going to say that we have a shot at breaking 9. And that would be where I would go.
So you're going to say like 8.5, so somewhere around that.
Sure. Yeah. Let's say 890.
890. So you won't break 8.5. We'll break 8. So you'll be in the won't break 8.5 camp. For purposes of our strictly codified poll here, we only have 4 choices. Mr. Uncle Mike, same question for you. What are you feeling, and what do you think the crazies are voting for?
I would agree with Mark. The crazies are probably saying it won't break 9. And with that, I think was a month ago was the question, you don't think it's going to break 9? Was that the lowest one? And the question that you did a few months ago, do you recall on that, Mark?
No, we did almost the exact same question. We asked him, we said, how low will VIX get? What will the floor effectively be for the rest of the year? And we gave him very similar choices, and the majority said it won't break 9. So we were kind of checking to see if their opinions have changed in a month or two.
I believe I said at the time that we're going to go below 8, but I guess I'm getting a little bit more stable on the VIX. I'll say between 8.5 and 8. I think we won't break 8. That'll be my low on this.
Uncle Mike, the bastion of stability. A lot of people, I think, were maybe swayed a bit by this week's market action, where we saw VIX actually heading north almost immediately after we posted this on Monday morning. Heading north and giving it up again, then heading north again. It seems like people have very short-term memories when it comes to the vol space, because we have an even higher turnout this week for people saying it won't break 9, about 2/3, 66%, saying VIX will not break 9 this year. I don't know. I mean, given how low we got last week and how the fact that we've seen vol just inexorably move south this year, when we get into those August period, or maybe even that December quiet period, I don't know, right back to me and see what you think. I think we could break an 8 handle, or break a 9 handle, I should say. In that period, then 17% saying, hey, it's look out below season. Going to see a 7 handle this year. So some of you have been reading some of that research coming out of Barclays over there. 10% saying it won't break 8, and 7% joining with the meatball saying 8.5 is the new low for the rest of the year. Let's see what else we got. Oh, we have our friend there who wrote into the show last week saying he asked us about if he should close his Shopify calls for I think he said he bought those. They were the July 100s, I believe. He said he averaged in at 588. So we looked at him last week, actually last show, it was a couple episodes ago. We all kind of counseled him to get the heck out of Dodge, because these things had really moved aggressively against him. The stock was at about $85. It was about $100 when he put those on. And the options had unfortunately lost quite a bit, about $3 of that 588 or so, actually a little more. They're trading about 240. And so we thought, at that point, you probably have to get the heck out of Dodge, reestablish, and find a better position. And hopefully he did, because these things have lost about another $1 since our last show. They're trading about $1.40 right now. So hopefully our friend, in fact, I think he did chime in here, and he said, no, he's still holding them as he sees there is reversal, looking like there may be a comeback. Well, for his sake, I hope he is correct. But how many times have we said that before on this show? I don't know, Uncle Mike, you're doing all of our strategery today. When you put on a long premium trade like that, what usually is your cutoff there? He said he bought them close to $6. We're shy of the 50% range now in terms of how much premium is left on that bone, how much meat is left on that bone. When do you usually call it quits? What's your breakout level, I should say, to get the heck out of Dodge?
Well, usually what I'll do is, if I'm doing a spread of some sort, like right now for the vertical spread that I'm in at this point, if we start going lower, I'm going to start, one of the things that I would do is roll the short call down and continue to roll it down. And then once we get to a point to where I'm like, well, I can't really roll this down anymore because it's making this counterintuitive, I'll get out and start over if I'm still bullish on the trade. So that's kind of my rule on it. I try not to lose too much doing that. And the way with which I try not to do it, if it's a long premium trade, would be to just continually roll down the short side of the spread until I'm at a point where I have to start over again in some way, shape, or form. If it's just a long premium trade, if I'm just buying long calls, then that's not a very frequent trade for me, quite frankly. And if that's the case, usually if it doesn't hit within a few days, I just get out regardless, just because of time decay. If I'm going anything longer than maybe a few days, then I'm likely doing a spread.
Yeah, I think when I looked at these a couple of days ago, they had about 7 cents a day worth of theta in them. Again, that's going to accelerate as we start getting closer to the expiration. Mark, as Mike said, most of us are not in the position where we go out and just willy-nilly buy calls very often. not without any sort of spread leg or anything. But that said, someone comes into your pit chat over there and they put something like this on. How do you normally counsel them to what's your point where you tell them to cut ties and get the heck out of Dodge?
I'm a big fan of premium slinging. I think it depends on, how you executed the trade. But, if I'm buying something where the vol's just dirt cheap, then, I may hang out for a long time. But if I'm like making a pure directional bet, then yeah, I'm usually saying, a couple of bucks and then you got to switch things. And that's that.
Yeah, it's hard. A lot of stock guys look at options the same way. They want to, if it goes against them, it's a long-term investment. Problem is with options, you got that time component, and the longer you wait, the more it erodes. And you could see the return to the level you want, but it may be too late by that point because your option has just eroded too much, where it just doesn't make sense. You're pretty much, if you're lucky, maybe you could break even, and certainly not a profit. But so yeah, interesting stuff. These types of trades are always informative for everybody here on the show. Hopefully it works out for, what was his name? It was Sal06. Hopefully he gets the reversal he's looking for. We can all cheerlead a trade, even if we wouldn't maybe put it on ourselves. All right, we got one here. Let's see, we got time for about one more. Let's see, what's a quick, easy peasy cabeezy ones. Let's go for this one from Nanfran. I think this came in a little while ago because they're asking about triple witching. That old boogaboo, the old bugbear out there of triple witching. We used to hear this bandied about a lot. They asked specifically, what does it mean for options? And, the more, I think we said this before on the show, the moral of the story is it means increasingly less with each passing expiration cycle. We see more products piling in. We added the weeklies. Those have started to take off. So now expiration is literally every Friday. We've added in some products Wednesday and Monday contracts. So now expiration is Monday, Wednesday, and Friday. It's probably only a matter of time till we get the full week worth of weeklies popping off. So when you have that many expirations firing off, the impact, shall we say, at least people the name sounds cool. It sounds evil. It sounds mysterious. It sounds like there's all this crazy evil going on that's going to move the market through all the options expiration going on that day. Unfortunately, it has, maybe fortunately, depending on your viewpoints, it doesn't really mean as much anymore. That said, Uncle Mike, maybe let's give them the technical definition so our friend Nan Fran could feel like they got their free money's worth. What do you feel? Well, first explain triple witching to them, and then if you feel it has any impact on options, what do you think that is?
Well, I believe from what it used to mean, and this was a long time ago, I'm just kind of jogging my memory here. Triple witching is once per quarter when futures would expire, futures options would expire, and equity options would expire on the third Friday of the month, because I believe futures would only expire every quarter. So I believe it was once per quarter that it actually happened. And it was really, I always felt, even when it was a big deal, that it really wasn't a big deal to begin with. Just because of the fact that a lot of times people are in and out of trades before expiration anyway, so I didn't think it was a huge deal. But with that being said, and I think we even had quadruple witching for a while when the single stock futures were popular. But at this point in time, I agree with you. It really doesn't mean a lot, but even when it did supposedly mean a lot, it really did sound cool on the financial media when they would talk about it. But in all honesty, I didn't, this was, years ago when this was even an issue. And even when it was an issue, I don't think it was much of one. But right now, I think it's a non-issue.
Yeah, it's one of those things that sounds cool, like fair gauge. Doing a lot of shows, a lot of talking today, listeners. Sounds cool like fair gauge, but then the actual resonance of it may be a little bit different. Interesting stuff. All right, let's keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the man said, this is the portion of the show where we break down what we're paying attention to, keeping an eye on, watching for the rest of this week. and not a heck of a lot. We did see the Fed kind of do their dance earlier this week, so that kind of takes a lot of the steam, a lot of the sting out of the big numbers for the next couple of weeks, the next month or so, at least, while we see the Fed kind of reload and readjust. We get some of the minutes coming out, and we do the whole dance again in a few months or so. Also, not really seeing a heck of a lot out there on the earnings front that's really left of any sort of significance, so that leaves us back kind of where we were at the top of the show, looking at some of these more bizarre macro-type developments and trying to read the tea leaves as to how they will impact the market. That said, Mr. Meatball, when you're out there, in addition to weathering the latest, what'd you call it, a Trump storm, Trumper storm, something along those lines. In addition to weathering those, what are you watching for the rest of this week into the weekend, sir?
You know, like I said, I think we got a decent shot at reversal tomorrow, and be watching for that. If we get the way things ended on the day, if we get another big sell-off tomorrow, I think you have to have some serious concern on what's going on with the NASDAQ and tech stocks, and have to wonder whether we've got kind of a slow, ugly, like year two, like a back half of Y2K type of ugliness happening. That could be interesting, but I don't know. That and then no real news. Going to be watching to see if anything interesting happens with our president and you know, some sort of ridiculous breaking news. But like I said, those don't really seem to affect things anymore. So like I said, I'm just looking for a rally tomorrow, and if we don't get a pop tomorrow, I will be concerned.
I think it was a Trumper tantrum was the exact word you used.
That was Trumper tantrum, correct.
Always coining good terms and new terminology here on the old option block. Last but not least, Mr. Uncle Mike, what are you watching in this sea of Trumper tantrums these days?
I'm going to see if we can get a little bit of a rally in the VIX, or if this will hold, because we definitely had a little bit of action in it. And I think we had talked about on the show a couple months ago, one of my clients sent me a logo from his trading club, "Make volatility great again." Well, I really don't see it having too much of a pop in the near term. Curious to see if it does, because what could happen right now, just because I believe that volatility is so low, I believe we're going to have a little bit of a rally over the course of tomorrow and early next week. But what wouldn't surprise me is if we had one of those situations to where VIX rallies along with a rally in the marketplace. Those don't last too long typically, but I could see something like that happening just because of the fact that volatility is so low, and we actually had a little bit of some movement in volatility recently.
All right, everybody. That music means we've come to the end of another epic journey through the world of options. Started off with some Trumper tantrums, got into the Fed, tantrums of a different sort. Got into some more crazy, weird puts out there in January 2019 of Tesla. Some crazy put rolling out there in Yamana Gold, and someone giving up the ghost, hitting that penny bid 20,000 times in good old AXDX. Maybe he wanted to buy himself a nice new cheap car. I can understand that. All right, and then, of course, your VIX predictions, when to close out an option that has moved so badly against you, and all sorts of other fun stuff. But before we go one last time around the horn, let's start with the meatball. What is cooking in the land of the pit, or perhaps Carmen line, that may interest our listeners? Is there, perchance, a masterclass going on right now?
We are in the middle of a masterclass, but I'm going to be doing a free webinar on Tuesday. Go to our blog to get yourself registered, or, I've tweeted out the link a couple times. So that will go and register for a free webinar. I just wrote a brand new kind of VIX discussion and trading webinar, and it's going to be a really, really good webinar, worth the time. So go get yourself registered.
There you go. Check it out, optionpit.com. You too can take the masterclass. And last but not least, I like saying that, in case you haven't figured that out by now. And last but not least, Uncle Mike, what is cooking in the land of RCM? Do you perchance have a masterclass of your own, patent pending, trademark pending?
I do not have a master class, but I have a masterful way of trading your own accounts if you are just sick and tired of that ticket charge. We trade through TD Ameritrade. We trade through Interactive Brokers. We trade through Trading/Money Block. If you're interested in eliminating the ticket charge, then contact me. Our per contract rate is 35 cents per contract or 25 cents per contract plus ticket charge, depending on which broker you use. Obviously, we charge a little bit of a fee, and that's how we make our money, but typically is much less than what ticket charges are. So give me a call. We can discuss 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
You heard the man. Hit him up. You too can avoid those pesky ticket charges. On behalf of Uncle Mike and the Meatball and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show and sending such great questions. Keep them coming, and we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.